Welcome to our comprehensive guide on home equity lines of credit, or HELOCs, tailored for those interested in real estate investment. In this video, we will unravel the intricacies of HELOCs and their significance in real estate investment. Let's dive in and explore how HELOCs can play a crucial role in your investment strategy. In this video, we will cover the following. What is a HELOC? Key considerations when using HELOC. Pros and cons of HELOCs. Best practices for managing a HELOC. When to consider using a HELOC, and an important disclaimer. Let's start with the basics. A HELOC is essentially a line of credit that's secured by the equity you've built up in your home. Unlike a regular loan, a HELOC allows you to draw money as needed, up to a certain limit, during what's called a draw period. However, it's important to note that the interest rates are variable, meaning they can fluctuate over time, affecting your payment amounts. Now, let's discuss some key considerations when utilizing a HELOC. Firstly, while the interest rates are typically lower than those on personal loans or credit cards, they do represent a significant expense. Next, one advantage is the potential tax deductibility of interest when the HELOC is used for purchasing rental property, reducing the overall cost. However, be aware of the inherent risk. A dip in property value or rental income can cause financial challenges. It's also wise to consider viable alternatives, such as using cash reserves or obtaining a traditional mortgage. Let's take a quick quiz to test your understanding. What could potentially be a tax benefit of using HELOC for real estate investment? Is it lower monthly payments, tax deduction on interest, reduced property taxes, or tax credit on equity? You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is tax deduction on interest. When a HELOC is used to purchase a rental property, the interest costs might be tax deductible, which can effectively lower your running costs. Let's now weigh the pros and cons of HELOCs. On the upside, they can facilitate faster portfolio growth, offer flexibility with how the funds are used, and often feature lower interest rates compared to other credit forms. Conversely, the drawbacks include potential interest expenses that affect profitability, the risk of variable rates increasing payment amounts, and the chance of over-leveraging, which could lead to financial strain if managed improperly. To maximize the benefits of a HELOC, it's essential to follow some best practices. Start by assessing your risk tolerance. It's crucial to understand how comfortable you are with taking on debt. Analyze all the numbers involved, such as rental income, expenses, and interest rates, to ensure you have a clear view of potential returns. Consider tax implications, including any potential deductions. Always maintain a detailed plan for HELOC management, including a repayment strategy and plans for future investments. Finally, keeping a healthy cash reserve can mitigate any unexpected expenses. So when should you consider using a HELOC? Ideally, when there's a solid investment opportunity that promises a good ROI and the interest rates are favorable, allowing potential gains to outweigh costs. You should have a thoroughly crafted plan, which includes a realistic analysis of your ability to manage the debt responsibly before leveraging a HELOC. Before we wrap up, it's essential to emphasize that this video is for educational purposes only and should not be construed as financial advice. Always consult a financial advisor to tailor decisions to your personal financial situation and before making any concrete investment decisions. To summarize, a HELOC is a useful credit line secured against your home equity, which can facilitate investment but comes with risks, especially associated with variable interest rates. It offers growth potential and flexibility, though it also has expenses and the risk of rising rates. By adhering to best practices, such as calculating potential returns and maintaining a plan, you can make the most out of your HELOC. Thank you for watching till the end. Remember to like, share, and subscribe for more insightful content. We'd love to hear your thoughts, so feel free to leave your comments below. Until next time, happy investing!